Hey there, welcome back to my channel. My name is Brittney Bundles, and today's video is going to entail me breaking down what contributes to building your credit. I'm going to be going over the percentages, and I'm also just going to be doing the, just a complete breakdown in depth on how you can rebuild and build your credit. So a little bit about me. If you are new to this channel, you may not know, but I am a former loan officer. I used to look at credit reports on a daily basis. I used to write up the recommendation or the recommended denial before sending the application up to the underwriting department to make a final decision when people would come in to the credit union or call over the phone to the credit union to apply for loans, auto loans, signature personal loans used for debt consolidation, or holiday loans, or just personal loans in general. Maybe they wanted the loans to go on a vacation, credit cards. I didn't work so much with mortgages, but I had some experience with that too. Had my NMLS number, but the majority of the loans that I did do were like auto loans, recreational loans, signature loans, credit cards, and things like that. So today I'm going to be, like I said, going over credit in depth. Now, I did make a video a couple days ago, and I was going over what a trade line is. There's a certain hype right now around trade lines, and I did mention in that video that I recommend you being ethical in every part of your life, and credit is no exception. There's always going to be some get rich quick scheme. There's always going to be some build your credit overnight type of scheme. I've never been the person to be drawn by the trending schemes or what's going on that isn't ethical, because in my experience, it always just works best to be solid. It always works best just to do things the right way. Number one, you don't have to really think about telling the truth or remembering any lies. It's just, you're telling your truth. Number two, you are able to learn from your mistakes. So anything that happens in life, I'm a strong believer that God can turn it around for the best. According to his word, all things work together for those that love the Lord and are called according to his purpose. So I definitely believe that. And not only that, but doing things the right way, it builds the discipline necessary to maintain what you build. How many times have you seen people get things? They may have nice vehicles, they may get a nice house, they may have a nice lifestyle, but it doesn't last. You know what I mean? And they may look like they have a nice relationship, but it doesn't last. So part of the journey in life is not just obtaining something, but it's being able to learn the discipline, learn the lesson that is necessary for you not to just obtain nice things, but for you to actually maintain and keep those things and continue to grow. So with that being said, if you are interested in this video, be sure to give it a big thumbs up. Please make sure that you are subscribed, and let's get right into the video. So the first point that I want to touch on is the payment history. Now, payment history is huge with your credit report. It has a huge weight. It's like 30% of your credit score. Payment history is simply payment history. So if you get an auto loan, are you making your payments on time? If you have a credit card, are you paying the minimum payment on time? If you have a signature loan, are you paying that on time? Whatever you have, are you making your payments on time? That is going to be very heavily weighted in determining your overall credit score. There are some people that don't pay their bills regularly, and then they have like a 60-day missed payment on credit cards, and they have like a month missed payment on their mortgage or car notes, and that looks bad. If you do a skip a pay through your banking institution, that doesn't have the same effect as you just not paying. I recommend, if you don't have the funds to pay, always giving your institution a call, the loan company a call, and seeing what you can do to negotiate or to go over their options, negotiate a plan where it's not going to report late on your credit report, because it's easier to tear down your credit than it is to build it up. So a couple of missed payments can definitely affect your credit negatively. And the time to really start paying attention to your credit is not when you want to purchase something. I see so many people that are like, look, I want to buy a car like today, and I want my credit to be a 700 because I want my interest rate to be lower on this car. I want to get approved at this rate and this payment. Okay, great. Good goal to have. But it's always best to start planning, to start rebuilding your credit or building your credit before you even are looking at something else, in my experience. Before you get to the point where you need to take out a loan, before you get to the point where your car breaks down and you need another vehicle, before you get to the point where you're looking at purchasing a home, go ahead and work on your credit, because it's the right thing to do. Like, have everything in line. That goes back to integrity, that goes back to doing things the right way, that goes back to not leaning on get rich quick schemes, that goes back to having the discipline to actually bring you forth to the next level of life. So start working on your credit now. Start doing it. Even if you're like, I don't really want to purchase anything, maybe not now, but when you do, you want to be able to have the freedom and flexibility to do so. So payment history, pay on time. One thing that I do to help me remember my payments, because it can be easy to forget what you need to pay. I set up reminders in my phone. So on my calendar, I have reminders that automatically tell me which date this credit card is due, which date this loan is due. I also set up automatic payments on certain accounts. So automatically the payments coming out, I don't even have to worry about it. So becoming more organized is definitely going to help in making sure that your payment history is on time. If you miss a payment, it's not the end of the world. You can't go back. No need to cry over spilled milk, but continue doing the right thing. Continue making sure your payments are made on time. The next point, the next portion of your credit that I want to go over is amount owed. That's 30%. So that is pretty much the amount of debt that you have out. More particularly, I would focus that on the balances that you're revolving on your credit cards each month. As a rule of thumb, I've said this in multiple videos, you want to make sure that you're revolving at least 30% or lower as far as your credit limit. So if your credit limit is X amount of dollars, then you want to be 30% under that X amount of dollars every month. It's okay to use the card. It's okay to use it for more than just gas. However, you do want to make sure that you're not overextending yourself, going over the limit or going over 30%, because that can have a negative effect on your credit score. And that's heavily weighted as well. That's 30%. So keep in mind, again, rule of thumb, 30% lower than your credit limit. If you have a credit card, I know how exciting it can be when you first get the credit card. I remember when I was a little younger and I got my first credit card offer and I was just super excited. But back then, a lot of people would say, don't use your credit cards or only use your credit cards for gas. And a lot of people, would stray against getting credit cards. Like, I really don't need a credit card. I don't want to go into debt. I don't want to ruin my credit. But credit cards can help you build your credit, as we're seeing. And so if you do it the right way, so 30% or lower than your credit limit. The next portion that's pretty heavily weighted on your credit report is length of credit history. So how long have you had certain trades open? Let me tell you this story really quick. I purchased this car from a dealership. So I got a loan. I didn't buy outright, but I financed this car through a dealership when I was in my younger 20s. And I remember that I was making really, really good money, really, really good money. I was in sales and I was getting great bonus checks. And I had my son at that point. He was a baby. I lived in an apartment. The apartment rent was not too much at all. It was not like these prices at all. Not like these prices at all. Let me just say that again. So I had a good amount of money, to play around with. And so I'm like, you know what, instead of making these payments every month, I'm just going to go ahead and pay off this car. It was like the 4th month that I decided to do that, where I thought that to myself. So I called the institution that I had my car financed through, and I said, hey, instead of making these payments, I'm just going to pay the car off. How much is it? How much is the payoff? Let me pay it. And they told me, they said, if you do that, it's not going to be as good on your credit as it would reflect if you made the payments. And I was so confused. I'm like, what do you mean? Me paying off the car is not going to show a positive impact on my credit report. I'm paying it off. That should be positive. And they had to explain to me, yeah, it's positive in the fact that you're paying off your car. But the way the credit works is they want you to demonstrate how you can pay on a certain trade line, a certain account each month. Are you going to pay on time? Are you going to miss payments? Doing that, building up your payment history is going to build your credit. So I decided to not pay off my car, but to continue making payments. I don't know why I have this pen in my hand. Let me put it down. But I continue to make payments. And that did build my credit, boosted my score. So that is something to consider. Also, when you're looking at the length of credit history, there are some people that have had credit cards literally for like 10 plus years. And then they're like, I don't really shop at this store no more, so I'm going to call and cancel this card. Do not do that. When you call and cancel a card, it has a different effect on your credit than if the creditor closes the card itself. If they close the card themselves because of no activity, that's not going to show negatively on your credit report in most cases. But if you call and say, I want this account closed, that could show negatively on your credit report. Also, you want to be cautious of canceling certain accounts. Like if you've had this account for 10 plus years, that is having a heavy weight in your credit. It's 30%. So you don't want to cancel an older trade line. You want to make sure that you're keeping the older trade lines if you can. Still make your payments on time. I'm not saying keeping the older trade lines. If you have like a loan past the loan, time, if you got an auto loan for 5 years, I'm not saying drag it out to 7. No, make your payments on time, pay what you agreed. But you don't want to look at just eliminating your longest trade lines on your credit report. Again, that is a heavy percentage of your overall credit score. So the next portion that I want to talk about is type of credit. That's 10%. So the type of credit is pretty much what type of accounts you have on your credit report. It's very good to have a mix. So it's good to have secured and unsecured trade lines, secured and unsecured accounts. So unsecured accounts would be like credit cards, personal loans, lines of credit. Secured accounts, secured trade lines would be like auto loans, mortgages, recreational loans. It's very important to have a good mix. There are some people that only have unsecured trade lines and their score is like 700. So their score wise looks good, but when they go apply for a loan, they are needing a cosigner and they may not be approved because they don't have a good mix. So keep in mind that having a good mix is definitely imperative. The other 10% is new credit. So it's new accounts that you're getting. So you can kind of tell in that phrase right there, or in that statement right there, the 10% for new credit, why I stress keeping the older trade lines, because new credit is 10% of the overall score, whereas the length of your credit history is 30%. So the older trade lines are definitely going to have a huge impact on your score overall. So I hope this video helped. I didn't want it to be too long, drag it out too far. I just wanted to give you all a breakdown of how your credit score is built. These are ways that you can build your credit, and these are ways that you can also rebuild your credit. You don't necessarily have to look for, like I said, a fix your credit overnight type of scheme. A lot of times institutions are hip to what type of schemes are circulating, and they try to do what they can to mitigate the risk on their behalf. And they also may put a note on your profile if you're someone that always tries to participate in the get rich or build your credit overnight type of schemes. It's really easy to go ahead and do things the right way. Well, I don't want to say it's easy, but to me, it just feels better when I do things the right way. And it takes a lot of the other nonsense out of the picture when you're just acting ethically. So if you have any questions on how to build your credit with integrity, or how to build your credit or rebuild your credit, something that I didn't go over in this video, be sure to leave the comment down below. I do want to thank you all for watching, and I will see you all in the next video. Bye.